Hello, everyone, and welcome to another guest interview on Your Broker Admin. This week, I'm excited to say that I'm joined in the YBA chat room by Glen McKay, Executive General Manager of Distribution and Mortgage Operations with the Victorian Mortgage Group, or VMG as they are commonly known. The interview with Glen is a bit longer than usual as we have a lot to discuss, so there will be no Humpday Helper or Reviews Wrapup this week. I'm your host, Rob Cummings. Thanks for joining me, and let's get straight into the chat with Glen. So Glen, welcome to Your Broker Admin, and thanks for making some time to join me today. I know it's been a hectic one for you this week, so very much appreciated.
Yeah, hi Rob. Thanks very much. Thanks for the introduction. I hope you're well, and thank you for inviting me to be part of the podcast.
Now, just some quick background on yourself that I'd like to share mainly for the benefit of our listeners. So from what I've learnt, you basically had about 27 years experience at NAB in business banking. But then in 2012, you went over to become a banking and finance case manager for the Financial Ombudsman Service. And in 2014, you decided to move back to banking, moved over across to Bank of Melbourne as an executive manager in business banking. And finally, in March 2020, you arrived at your current role with the Victorian Mortgage Group, coincidentally, same time as COVID arrived in Australia.
Yeah, that's right. You've done your research. So a sort of a banking career, I guess you'd say, that sort of spans 35 plus years. I've done pretty much all the roles in retail and business banking and have spent a number of years also involved in the broker network. So there's not too many sort of scenarios or challenges or problems that pop up that I sort of haven't seen or come across before. You're right. So 27 years with NAB and left them and did move to the Ombudsman's office, which was a real change. And that all came about because I wanted to see something different after spending so much time after leaving school and doing my studies and only ever at NAB. It was time to see 4 different walls and an opportunity presented to work at the Ombudsman's office. And I did a couple of jobs there, case manager and also leading a team of assessors when it came to facilitation of mediation when you're trying to get outcome on certain cases. And I worked there for about 2.5 years and learned a lot, with it being predominantly mostly lawyers worked there. And there wasn't a great deal of people with banking experience, and me going there was sort of almost like something a little bit new. Really enjoyed my time there, but it was a little slow and it wasn't as dynamic as I'd like it to be. So the opportunity came to come back into banking in 2014 after 2.5 years. So I went across to Bank of Melbourne, part of the Westpac Group, and spent 5.5 years there, and then joined VMG in 2020. And it was a newly created role. And at the end of my first week, we got sent into lockdown. Yeah. And I didn't head back into an office environment for about 9 months. So quite interesting and quite challenging, but it's all worked out well.
From the timing point of view, it was perfect timing, like I said, after the first weeks. Now, as you said, I've done a little bit of research. Now, I've also heard a whisper that you're a bit of an expert punter on the ponies or sport in generally, and potentially the next Lloyd Williams. Mind you, I guess you haven't been backing the West Coast Eagles too much in recent times.
Yeah, no way. Well, the West Coast Eagle part comes about because I grew up in Perth and became an avid West Coast Eagle supporter in the ASL when they formed in 1987 and moved across to Melbourne in 2003, but never had a thought of swapping over to support a Victorian-based team. So I really enjoyed the AFL. And also horse racing. I've been involved since I was a young kid. And I'm a member of all 3 Victorian race clubs and currently part own about 8 horses, so not quite in the Lloyd Williams League or the Lloyd Williams category. Some of those horses run faster than others, but the ones that run faster generally aren't fast enough anyway. So it's a fun hobby, but it's an expensive hobby. But something that I've been doing pretty much all my life.
Yeah, I suppose it gives you an interest, doesn't it? And if you enjoy horses, yeah, why not?
Yeah, a great outlet away from the working life.
And get the opportunity to celebrate your wins whenever they come along.
That's it.
Well, I think we might move on now to the reason I actually got you here today with the, and that's to talk about your role with VMG. What was your understanding of VMG before you made the move across?
Yeah, so interesting. I've got a friend who's still a good friend of mine that I worked with at NAB when I first moved over to Melbourne in 2003. And he ended up moving into NAB's wholesale and securitisation area, where he's one of their directors. And he's looked after the actual VMG account for, or has to be 10 plus years now. And he'd been telling me for quite a while about this non-bank who were highly thought of by NAB in the way that they went about their business. And effectively, they were an organisation that would lend to people that were unable to get funding from the bank. So they would have had a hurdle or a blip on the radar in terms of their creditworthiness. And with banks being quite sort of strong on their policy and not varying a great deal, VMG was an organisation that would look to help those people out. So an example would be if they had a tax debt or they'd missed a payment or two on their home loan or their credit card, and that would sort of almost render that client unable to go through a bank. So they needed a solution, and then they would come to a company like VMG who could help them out and then ultimately get their credit back in order, and then with a view to potentially going back to a bank, 12 or 18 months or 2 years down the track. So he kept talking to me about moving out of the bank if I felt like I needed to change, and that's effectively how it came about.
Yeah, okay. So what was the actual driving motivation behind the decision to actually make the change from NAB to go across to VMG?
Yeah, okay. So, NAB was then to the Ombudsman, then I ended up with the Westpac Group at Bank of Melbourne, and ultimately I'd been at the Bank of Melbourne for about 5.5 years, doing similar stuff to the old NAB days, which is really around business banking. There was a lot of changes at the time with Bank of Melbourne, and the main one was that they became absorbed into the Westpac Business Bank, and effectively, instead of being two separate businesses, became one. Gave me some time to think about what I was going to do and whether it was time to maybe think about doing something completely different. Well, not so much completely different, but different from a bank to a non-bank. So my friend set up a coffee chat with the owner of the business, and from there we had a couple of conversations, and he said to me that he would create a new position, which he did. That position wasn't the job that I'm doing now. It was to actually lead the analyst team, and that was to set up processes to improve our service offering and the way that we interacted with the broker network. Whilst we were effective at it, there were some processes that we could put in place to streamline it and make it much more efficient and much more professional. So that was where it all started. And then I was also given the opportunity or the autonomy to come up with policy changes that I thought could take the business from where we were back then to potentially where we are now, because VMG was always quite a conservative lender. And whilst we would help these people that have been through some challenging times, we were probably asking for too much information, and we probably weren't as quick as what we needed to be. So we came up with some ideas around that as well. And then I guess it was probably 18 months or 2 years down the track, we felt that our service offering and our processes, our interactions with the brokers has come a long way, and it's very good now. And then I went across to the national sales role, of which I have now, which sort of tied into what my banking experience was, because it was always in like sales leadership type roles. When I joined, so it's what now I'm into my 6th year, we were probably settling $4 million a month, and a big month was like $6 million. Now we are consistently above 30 million a month, and the next milestone that we're going to be pushing for is 50 million a month, and we've taken on more BDMs in that regard to assist in that audacious goal, I guess.
Yeah, that's fantastic. So, um, would it be fair to say that coming across to VMG was kind of like a new challenge, a new exciting challenge for you?
Very much so, and it was very different from you've got to get your headspace out of how does the bank look at a deal to how does VMG look at a deal, and you needed to adapt quickly. It was challenging early, especially because of the COVID issues, but so rewarding when you can come up with ideas to make some changes, and with it being a small organisation that's quite nimble and quite flexible, you can go and present those to the owner of the business, and if he likes it, it's implemented immediately. If he wants
Yeah,
to think about it, you'll get an answer within 24 or 48 hours. So
yeah.
a real challenge, and it's been great for me, and it's given me a breath of fresh air.
Yeah, that's pretty awesome. Now, we've actually recently had the opportunity to successfully work with BNG for the very first time. So, whilst I normally wouldn't have lenders on as guests on my podcast, our experience was such with BNG that we thought it was worthwhile sharing you guys with others. And whilst I'm aware of BNG services now, there would be heaps out there that wouldn't be like we were before. Can you give us a bit of an overview of VMG, like as in, okay, you've sort of touched base on what you kind of do, but probably a little bit more granular about who VMG are and what it is you're actually doing for the brokers.
Yeah, for sure. And I talk to this often. I travel to most of the states of Australia, and I speak to brokers often. And one of the first things I get asked is, "What are your niches?" And I always say it's a little bit of a challenging question to answer because there are so many, and we are so broad, and we purposely have a very flexible credit policy, so therefore we can fit the round peg into the square hole. Yes, we do have some absolute black and whites that we can't deviate from, but there's only a handful of those, and the rest is then open to our interpretation, our subjectivity to try and get those tricky deals through. So, if I was to narrow down the niches, what I would say is probably two things. Number one, we like to help people that have been through a life event. Now, a life event could mean death of a family member, serious illness, loss of employment, marital split. And we know that we can't help 100% of the people 100% of the time. But if we understand the backstory as to what has happened and we can get some information around that to get comfortable, then we want to, in every instance where we can, is reset that customer and then give them a second opportunity to get their finances back on track. The other thing I talk about a lot is self-employed. We're never going to see two PAYG applicants who have got a great credit history because they're going to go to a bank. But probably 95% of the opportunities that we see, there is an element of self-employed in there, whether it's one applicant, both applicants. And then we can get involved with short-term ABNs. We can get involved with seasonal or lumpy type income. We can get involved if somebody has gone from PAYG to self-employed and haven't been doing it for a great period of time. We rarely will see 2 years worth of financials. So the question that the BDMs will ask a broker will be, what financial information can you give us? And then let us do the work around that. Let us play around with the ad backs to try and find as much as we can from a servicing point of view. So there's a heap of other niches that I can talk to, but just conscious of time. Some of the other things that I always like to let brokers know is around our service offering. And when I talk of the service offering is that the SLAs are quick. A scenario we generally look to have sorted out within 24 hours. Sometimes it can be 2 or 3 hours, but let's say 24 hours. And applications, when they come in, generally speaking, it's 48 to 72 hours, which is quite good. We don't have any annual reviews or any covenants attached to any files that we look at. We don't credit score. The credit assessment is done by experienced credit practitioners, I guess, who have got significant experience in either banking or non-banking roles. We don't use any DTI or DSR ratios as well. So it's the flexible, common sense approach. I wouldn't mind sharing a quick case study as
Yeah,
part of
absolutely. That'd be
what we do.
fantastic. Yep, I was going to ask you that,
Yeah,
so that's great.
yeah. So an example would be we looked at husband and wife. He was 61 and she was 59, and they both worked for the Australian government. He was a lawyer and she was a midwife. They lived in metropolitan Melbourne with their own property. They then both got transferred to Canberra. So then they decided to rent out their house, and they rented it out to their daughter on special, let's call it mates rates. What they wanted to do is they wanted to refinance their home loan, which was on the property in metropolitan Melbourne. They also had some land in regional Victoria, and they wanted to refinance that across as well. And they wanted to build what was going to be their eventual retirement home, which they would live in say 4 or 5 years' time. The issue they had, and they were with a big bank, and the big bank said they couldn't help them, was that whilst he was a lawyer earning $215,000 a year, the wife was a midwife earning $85,000 a year, but she'd hurt her shoulder. So she was on work cover, and the work cover was only covering 75% of her income. So it was, 63 or 64,000. Once we put all the numbers into the servicing calculator, it didn't service. So we wanted to do the deal because the security was good. Obviously, he had a good job. She had a good job, even though she was on work cover, and we wanted to find a way forward. So what we did was we allowed the full 85,000 of her income, and the mitigant was that we would expect that she would go back to work in a reasonable time frame, even though she didn't have a return to work date. And so we allowed the full $85,000 there. The market rental on the property that the daughter was living in was $650 a week. She was only paying $400 a week. So we allowed the $650 and we shaded that to 90%. We would normally shade to 80, but we went to 90% in this case. So that was demonstrating our flexibility.
Mm-hmm.
And we took future rent on the house that they were going to build. Because the intention was that on completion it was going to be rented until they decided to retire, which is 4 or 5 or 6 years down the track. And we shaded that also to 90%. So that was able to get us to service under our calculator, and we actually progressed with that deal. Now, we had some mitigants around it. That he was a lawyer, she was a midwife. We liked the industries they were in. He had a reasonable super policy. The total loan that we gave them across the 3 loans was 1.7 million. His super policy was 1.2 or 1.3 million. So there was a strong mitigant for us to do that deal. That house is being built as we speak, and it's actually nearing completion. So that transaction has worked really well. And there was another one that I wouldn't mind just quickly sharing as well, where we had a chap that came to us via a broker who had been rejected by 4 non-conforming lenders. And when I spoke to the broker, I asked why, and the broker said simply, well, number one, he's got 8 loans that need to be consolidated, and they're capping out at 4 loans. Number 2, his credit score was 25, which is quite low. And number 3, on their calculators, they couldn't get it to service. We had a look at the deal, and we worked out the reason that the credit score was so low, and it was because he had these 8 facilities, and all 8 would fall in arrears every month, but he would never fall more than 30 days in arrears. He was just on this cycle that he couldn't get out of, and his intention was good, and he was always making repayments, albeit late. We had a look at it. We punched it into our calculator, and we could make it service. So we reset him, put everything under one loan, saved him $525 a month, and we were able to do that loan and had an indicative offer out within 48 hours. So that's just another sort of example of the flexibility that we try to use to, again, fit that round peg through the square hole.
Yeah, both of those are pretty cool. I mean, and very liberal. And that was our experience. If you're enjoying the podcast, then feel free to jump onto podchaser.com, search Your Broker Admin, where you can leave a review, rate the podcast, or just simply follow us so you don't miss an episode. You've kind of touched on base sort of where I was going to go to next and in just what you've explained there. But what is it about VMG that potentially sets you apart from others in that same space.
Yep. And I always talk to servicing. And the reason I like to talk to servicing is that in my travels, one of the questions that I always ask, and I ask the BDMs to also ask when they're talking to brokers, is what's the biggest challenge that you face? And invariably, in probably 90 or 95% of the responses, it's tight servicing. So, we like to think that we've made some changes that are going to better the broker network. And what I mean by that is that when the interest rates started increasing, and I'm going to guess a couple of years ago now, we all knew that it wasn't going to be one interest rate increase. It was going to be multiple. So we thought, well, what are we going to do here? Because all of a sudden servicing is going to go from being pretty good to really challenging. And as it turned out, those rates went up by, I think, whatever, 4% or whatever the RBA rate rises were. Was number one, whilst the number of lenders have their buffer at 3% or 2.5%, we've continued to use 2%. So even though we've had some pressure to increase it by regulators, we've been able to keep ours at 2%. So that's been a real positive.
Okay.
Where there's other loans, and what I mean by other loans is those that are not being refinanced across to VMG, we reduced our buffer from 1% down to 0.75. Now, that may not seem like much, but we adopt a flexible approach on a case-by-case basis. And what I mean by that is that if we want to do the deal, and if the only thing causing it to not service is that buffer of 0.75 on the other loans, we'll then look to drop that to 0.5 or even 0.25 or even go to actual if we need to. So there's flexibility there. Yeah, flexibility there in need. Credit cards. If we get evidence that a credit card is paid off each month for the last 3 months or it's not being used at all, we will remove that credit card from the servicing calculator. So on a $10,000 credit card, that will free up $3,600 of servicing. And as you can imagine, if it's $20,000, well, then it's $7,200. HEM apportionment for dependents. So if we have a marital split and we get evidence of the split of the custody for the dependents, we can apportion the HEM appropriately. So a simple equation is there's 2 children involved and the split is 50-50. Well, then we'll only take into consideration 1 dependent and not 2. Or if you've got one of the partners that only get the children, for a weekend every fortnight, then potentially that would mean that there'd be an add back of 85 or 90% of the HEM. So that's been a real winner for us. Our rental income guidelines are to 80%, shaded to 80%, but on a case-by-case basis, we can look to do that as up to 90%. We've been as high as 94, but 90 seems to be like the new norm. And we have a negative gearing add back as well that can be added as another form of income, and that is 30% of the interest expense on the investment loan. So that's something that we've brought in as well. Family tax A and B and child maintenance income, we allow that up to age 18. That was to age 12. We increased that to age 16, and now that's up to age 18. If there's some HEC step of 10,000 or less, we can remove that completely from the servicing calculator. We have a flexible approach to add backs for self-employed customers and company debt to be removed from personal servicing. And the last thing I talk about from a servicing point of view for brokers that are on Quickly, Quickly has our minimum guidelines. So we have to put our policy guidelines in there. So, of course, that will have in there 80% for shading of rental income. It'll have credit cards at 3% per month or 36% per annum. And what I then say is that because Quickly can't take the flexible approach, they've got to take the baseline. Any broker that uses Quickly, I urge them to pick up the phone and ring a BDM because we've got some levers that we can pull that could potentially increase that lending capacity. So there's a number of things that we've done from a servicing point of view to try and make it just that little bit easier for the brokers to get the outcome for their clients.
Yeah, okay. And access to resources for brokers?
I ask all of the BDMs that when they're talking to brokers, that obviously they have to be the first point of contact in terms of workshopping a deal. And if the BDM needs some additional assistance, well, then they can then workshop that with credit or with me. We can do that as a three-way teleconference, whatever we need to do. We've got a ruling here or some guidelines that we follow that no loan can be declined unless I'm made aware of it and agree with credit's decision. So
Right. Okay.
if credit don't want to do a particular loan, and I think there's merit that we should, then we'll have a bit of a chat. And if we still disagree, then what we do is we just take it to the umpire, who is the owner of the business, and then he'll ultimately make the decision. So that's a really good thing for us in that we make sure that we're all learning off each other all the time, and we're not always going to agree. But it's just a good credit review process that we've got in place. Even better is if I can convince them that we should be able to do the deal, well, then we can do the deal, and then we can just sort of streamline that through the system as quick as we can. So we're just trying to make it as easy as possible for the brokers to do business with us.
Yeah. Okay. And so you carry a bigger stick than credit?
Well, you probably hear, with you and I, with our experience in the finance world, is that credit normally run the show. And if credit say we're not doing something, well, then invariably we don't do it. But we've developed a team here where the mindset from the analyst in credit is tell us the story, give us the issues or the hurdles, and let us work it out. So the mindset is how do we make this work as opposed to finding the problems and not making it work. So we've done some, I like to think we've done some really good recruiting in that regard to make sure we've got the people with the right mindset that whilst they've got to have a credit mind, they also need to have a sales focus as well.
Yeah, that's really important. Because you can get caught up in credit, too much credit.
Yes, correct. So that's worked for us. And to be honest, I mean, the amount of times that we actually have to go and get the owner involved, it's if I had to throw a number out of it, I'd say one a month. So it's not that often at all.
That's actually fascinating. Like I said, just that one deal, so it was only a small sample. That's what really appealed to us, the flexibility, the willingness to look at different angles, stuff like that. So, that we thought that was fantastic, and probably don't come across that very often.
If I added to that, it's not just the servicing. There's policy requirements as well that we'll be flexible on. And as an example, our guidelines are that we go to 25 acres in terms of land size. Now, if we get a property that we want to do the transaction on, we'll go to 100 acres as long as there's a nice, decent house on that property. So, we'll push that 25 acres up to 100 acres. We don't, we're okay with aged borrowers. So, I mean, if somebody comes to us and they're 72 years of age and we understand the transaction and there is an exit strategy, we're okay to give them a 30-year loan term. They will need to get independent legal advice, but we'll push that boundary a little bit as far as aged borrowers are concerned. I mentioned before on the flexibility around the self-employed stuff. I mean, I say we'll never get 2 years or very rarely get 2 years worth of financials. So we've done full doc loans on 2 BASs, management accounts for the business, and some bank statements. So that's just trying to adopt that flexible mindset and common sense approach, put a lens over it that makes sense to us, and then we try and do that deal.
Yeah, that's great. Okay, Glenn, how can, anyone being a broker or even a power broker who wants to know more detail about VMG and your offering, how can they get in contact with you or find out about you?
Yeah, well, a number of ways. So the simple starting point could always be the website, and then they can review products and read more about VMG. I mentioned before that we're on Quickly. We are also on the AI program Scenario, and we're also within the Broker's Bible. So information will be on VMG through those platforms, and also they can reach out to me by phone or by email. I'll connect them, whoever contacts me, with one of our BDMs who are geography based, and we have BDMs. I've got 2 in Queensland, 3 in New South Wales, 5 in Victoria, 1 in South Australia, and 2 in Western Australia. And one of our Victorian BDMs covers Tasmania, and one of our New South Wales BDMs covers the ACT. We don't lend against security in the Northern Territory, even though we will deal with brokers in that territory, but we just don't take security in that area.
And just for the benefit of the listeners again, what is that website address?
www.vmg.com.au.
Okay, great.
And if they want to contact me, 0447 519 086 or Glen, Glen .McKay, MCKAY @vicgroup.com.au.
Excellent. Thanks for that. Okay, so I think we might wrap it up there today, Glen. Again, thank you very much for putting yourself and making some time to talk to me today. I'm sure that whoever listens to this will certainly get some value out of it, as we did when we first had our experience with you guys. So yeah, thanks very much again.
Yeah, Rob, thank you for having me on. Really appreciate it. I hope that there is some value out there for your listeners, and I'm more than happy to have them reach out and try and help them out wherever we can.
Just a quick reminder that if you'd like to provide a review on the podcast, then you can jump onto podchaser.com, search for Your Broker Admin, and leave your review there, which would be greatly appreciated. You can also leave comments on any specific episode directly in Spotify. If you want to follow me personally, you can do so at linkedin.com. This is Rob Cummings with Your Broker Admin. Thank you for listening.